Welcome to the show today. Today, we're going to be talking about how to take your income and investment to the next level. Today's guest, Chris Larsen, is the founder and managing partner of Next Level Income. Chris has been investing in managing real estate property for over 20 years. While still in college, he bought his first rental property at the age of 21. From there, Chris expanded into development, private lending, buying distressed debt, as well as commercial offices, and ultimately syndicating multifamily properties. Let's welcome Mr. Chris to the show. How you doing?
Brandy, I'm doing great today. Excited to be here.
Great, great. So, you don't hear a lot of 21-year-olds going out buying their first piece of property. What sparked the interest on doing that while you're still in college?
Yeah, so thanks for asking about that, Brandy. I was always in search for freedom, and in my book, which I'll tell your audience how to get for free here, I talk about how my dream was to be a professional cyclist. And I'll never forget the first time I left the neighborhood on my bike. I was oh man. Yeah, maybe like 10, something like that. I could cross like the big road and just the sense of freedom I got on the bike. And then I started racing bicycles and I would drive up and down the East Coast when I was like 16 years old, going to bike races with my best friend, Chris. And actually, that friend, Chris, passed away. He was my training partner. He was my roommate in college. And he was my best friend. He was like a brother. He died of a massive brain hemorrhage. And after that point, I kind of turned into myself, kind of inward. I trained a lot. I was riding my bike a ton, kind of as therapy. I got really good, but I wasn't happy. And as I decided to quit racing instead of pursue my passion of being a professional cyclist, that dream of true freedom still stood. But I also had this feeling like I had to live like two lives, like to make the life of Chris, kind of justify the life that I still had in my eyes, and also continue to live the life that I had as well. And during that process, I quit cycling about a year after that. I quit racing bikes, and I started looking at different things that were out there. I was in engineering school at Virginia Tech. I started day trading, and I just started like devouring investment and money books. And during that process of reading 250 some books, I I discovered real estate. So I looked at different real estate options. My parents had three rentals that they had, just like single family rentals, little things. But I had the opportunity to buy a property right up the road from where I was renting. I bought it. It was a 3-bedroom townhouse, rented the other 2 bedrooms out. And as I learned more about real estate, I realized that, wow, as an investment vehicle, it was a really good fit for me because it had leverage, it had the ability to control your investment, and it was scalable and had these great tax benefits. So that's what got me into it. From there, I built a portfolio of single family rentals and then ultimately got into multifamily, which is our big focus today, Brandy.
Oh, awesome. So there's so many different types of real estate that one can invest into. Um, Tell us the different types of real estate that you feel that someone should get into as a beginner, and then how does that expand out to different types of real estate someone can invest into?
Yeah, so it really depends on your situation. So I just started a coaching program. So when I work with my coaching clients, what we start out with, Brandy, is where are you? What are you doing today? And in my book, I talk about how the strategy that I work with is how to make more money, how to keep more money, and how to grow your money. So when we get to that point, and how to grow your money through real estate, it depends. Are you a 23-year-old that doesn't have a lot of money to invest, and you're okay doing some active stuff? Maybe you like to do rehabs, something like that. You might buy a fixer upper that you can flip. Maybe you're somebody that maybe you don't want to do rehabs, and you don't have a lot of money. Maybe Airbnb is a good option for you. I think, if I was advising young people today, I'd say if you're going to buy a house, buy something that you can fix up, add value to. You always want to look for something to add value to, whether it's an apartment complex or a single family house. If you fix it up, live in it for a couple of years, you can turn around and sell that and take that money tax free. So, for example, if you buy a house for $200,000, and if you put $50,000 into it to make it worth 300, you could sell that property after 2 years. And according to the IRS, you can pocket that $100,000 profit tax free. So, I mean, there's an opportunity to take 50, turn it into 100. Where else can you double your money in 2 years like that in a predictable fashion, tax free? So I think that's a great strategy. On the other end of the spectrum, we work with a lot of surgeons, doctors, high income earners. Let's say you're making $500,000 a year. you want to get into real estate, but you don't want to manage it. And that's what we specialize in, is helping those people, you know, have an active real estate investment that's passive for them.
That's really great because a lot of people, like doctors, lawyers, and people that have dispendable income, and even those that don't have that kind of dispendable income, sometimes work a lot and don't have, the time to manage these properties. So, do you think, and like joining the investment club would be something good for someone to do in the beginning, or how do you feel about that?
Yeah, absolutely. I think, there's two things that I always recommend. One, you want to surround yourself with people that have a like mindset. I think, whether that's going to your local real estate investment club is a fantastic option. RIA, that's what I started doing when I was about 20 years old. Maybe if you're in college, you could start your own group. There's a ton of virtual masterminds that are out there. And the other thing that I think is great is finding a mentor. Find somebody that has done what you want to do, that's emulate the success that they've achieved, and potentially get somebody that can help get you to that point and hold you accountable to it as well.
So, what do you think is like some of the common mistakes that people make in the beginning? So, for you, what are the mistakes that you think you made in the beginning of your real estate adventure?
We got a problem, Brandy, because you said we only had 20 minutes, and it's going to take me a lot longer to go through all the mistakes I made. So this is a big reason I wrote the book. So and you can get it on our website at nextlevelincome.com if you're interested in diving into it. But the reason I wrote it is because I want people to avoid making the mistakes that I made. So first off, I think a lot of times I got a call from a friend slash investor last week, and he said, "Hey, Chris, I want to invest in a house. I'm going to buy a house." I'm like, okay, that's, buying the house that you want to live in. That's not an investment. I said, let's think about this a different way. Why don't you invest in a house that you then live in? And he said, what, like, you're just saying the same thing I'm saying, I said, well, no, like, what if you bought a duplex and you lived in one side and rented the other side out, right? Like that would be buying a rental, an investment property that you then live in, or a fourplex or an apartment or something like that. Well, what if you, like what we did, we built a house, we put an Airbnb in it. You could look for different strategies to help monetize what you're doing. So I think number one, people think that real estate is an investment. No, your home is an emotional purchase, not an investment. Don't make that mistake. Number two, people are too eager and they just want to get in and get into something. The worst thing you can do is just throw your money at something. You want to take your time. You want to educate yourself. Again, work with somebody that knows the mistakes that are out there, that knows the pitfalls that are out there, because you can make a lot of money in real estate. You can also lose a lot of money in real estate. And what I say to my clients is that you would rather pass up 10 okay deals for one good deal than buy 10 okay deals instead of one good deal.
That's man, that's really great. So we always hear about the pitfalls that people make into real estate, but can you tell us some of the ways that we can make money in real estate?
Yeah, absolutely. Absolutely. So really that's the great thing. There are so many ways out there. So, I talked about, you have to first look in the mirror and say, what type of investor am I? And what do I like to do? So if you enjoy swinging a hammer, maybe look into fixer uppers. Like that's a great thing to look into. If you're okay with management, you don't have a lot of money, maybe you could start an Airbnb management business. And if you're listening to this, you can check out our recent podcast with Kyle Stanley. He's got a terrific method of how to start an Airbnb business, even if you don't have a lot of money to get started. He has a kind of an arbitrage strategy, which is, I think, really powerful for those that don't have a lot of money. And you can earn like 10 times what you would earn versus just renting out a house. And then, again, if you don't have a lot of time, but you have a lot of money, which there's a lot of people out there today that they have money, they just don't know where to invest it. And, they look at the stock market and they're thinking, man, there's a lot of risk in this right now. I'd like something more stable. That's why I tell people, I say, invest like a family that's worth $100 million, not like a million. Families that are worth $100 million, Brandy, they put about 25 to 30% of their wealth in income producing real estate. So these are things like partnerships, like the deals that we do, investing in apartment deals, self-storage facilities, commercial office, things like that that are stable, that are cash flow positive from day one, that are producing cash every day, but also allow some upside value as well. And these types of investments are good even when the market starts to dip because they're producing cash flow, and they're also an inflation hedge. So, if you're worried about the market going down, it's a good place to put your money. If you're worried about the economy getting too hot and inflation, it's also a good place to put your money as well. The one thing about income producing real estate, Brandy, is you're probably not going to make a 50% return one year like you see in Bitcoin here, but you're also not going to see it drop 50% most likely as well.
Yeah. So there's so much risk factors when it comes to that. So do you think it's safe to say that someone should definitely diversify their portfolio, hedge it with a little stock, with a little real estate, so on and so forth? You think that would be the best strategy for a real estate investor, and not just put all their income or disposable income, if you will, in just into real estate?
So I think there's a couple different ways you can look at it. So if you're an investor and you're nearing retirement and you have an ample portfolio and you want some diversification, then you can start pulling some of that money out of some of your other investments and putting them into real estate. As I talk about in my book, that's why I call it the Holy Grail, is because you get this increase of return, but a decrease in risk, which is amazing. Increase return, decrease risk. I think that's fantastic. That's like the holy grail of investing, as Ray Dalio says, which is where I got that term. The other strategy is if you're younger and you're working towards financial independence. I don't like to say retirement. I hate that word. I talk about more freedom, financial freedom, financial independence. You can put a strategy in place where you invest on a regular basis. This could be a quarterly basis, an annual basis, with the anticipation of replacing your income. And again, once you have figured out the strategy, whether that's, more active or with something like Airbnb or doing fix and flips or something more passive, like these partnerships I talked about, I think those are the two things that you can look at. Do you diversify to get a higher return and decrease risk, or do you invest in cash flow investments that are going to replace your income? I think both of those things are going to have a fairly low risk strategy.
Speaking as that as the strategy for low risk, what are the most important metrics when evaluating real estate?
Yeah. So again, it depends a little bit on the different classes that you're looking at. But I like to look at it from a high level down to a deal level structure. So number one, you have to think about where you're going to invest. So if you're looking at apartments, you want to be in large growing cities. I like cities in the Southeast, like Charlotte, Raleigh, Atlanta, Jacksonville, Florida, even like Dallas, Texas. Phoenix is great, in my opinion. So is um, you could talk about, I think I mentioned Dallas as well. Some of those markets kind of in the Sun Belt. And then, who are your partners? Whether you have an operating partner, like in our deals, where you have somebody that's help operating those deals, or let's say you're doing fix and flips and you're providing cash and you have a partner that is actually doing the construction on those deals. So you have to be really considerate of who your partner is. Are you well aligned? Do you trust them? And do they have history and hopefully success in that space that you've been in? And then you want to look at the deal level structure. So when I look at deals, I was having a conversation with a young client yesterday that I coach. He was saying, like, how do what are your pillars of investing? And you want something, in my opinion, if you're conservative, that's cash flow positive from day one. You want that stability. Certainly, there are great opportunities in a little bit more riskier endeavors like construction and development. If you do that, you want to make sure that you have, again, really, really strong operating partners that have demonstrated success in those areas that you're working with. So, again, know the area you're working in, know who you're working with, and then ideally you're investing in something that is stable, cash flow positive.
So you did mention prior to this my follow-up question about the Holy Grail in real estate, and I think you did mention that it's in your book. Tell us what that means. What is the Holy Grail of real estate?
Yeah, so I wrote the book Next Level Income, and the subtitle is How to Make, Keep, and Grow Your Money Using the Holy Grail of Real Estate to Achieve Financial Independence. Again, I think the holy grail of investing is getting to make more money with less risk. That's fantastic. And I was investing in single family properties for 15 years, managing them myself, Brandy, before I got into multifamily. So multifamily real estate or apartments, as we all know them, is an area that's going to be stable. There's going to be demand. I go through in my book the demographics, how the millennials are renting, how even the baby boomers are renting now, how people are liking to move out into kind of these secondary suburban markets, and there's a consistent demand there. Also, the millennials, they're challenged still by student debt. They've seen what happened last year as well, and they say, man, like this pandemic, we get these shocks to the system. Maybe we're better off renting so we don't have this burden of a housing payment over us if we want to move, or we have a job loss and we have the opportunity to move somewhere else. It's a challenge. I talked to somebody yesterday. I asked him, I said, hey, would you be interested in moving? If he was calling about kind of some advice on potential job opportunities in the future. I said, well, Asheville's a small market. Would you be interested in moving? He goes, well, we just bought a house. So for him, house is a dream. It's a place for his family to live, but now it's also a bit of a burden preventing him from potential opportunities in the future. So I think millennials realize that. So you have this, stable asset class that has high demand. We like to buy properties, Brandy, that are built in the last 20 years that we can come in and we can run more efficiently, but also that we can inject some money and make the communities a better place for people to live. That means they want to live there. There's more desirability. They're willing to pay a little bit more than they were before. So that allows us to increase the revenue. We decrease expenses through more efficient operations. That means the NOI, the net operating income, increases. And when that net NOI increases, it increases the value of the properties. So you have a stable cash flow investment where you can control the appreciation. And then the final piece that I talk about in the book is how you can repeat the strategy and really create generational wealth for not only yourself, your family, but also future generations.
Man, that's so awesome. Man, that is awesome. And that you made a great point about how millenniums are kind of catching on about renting properties and being able to leave themselves open to, get better job opportunities, especially now, different from baby boomers when, going to college was only a few $1,000s and now college is literally 50 and $60,000. It gives them opportunity to kind of move around a little bit. And I like how you touched on the fact that your property that you build for your family is an emotional purchase and not actual investment purchase. Why do you feel that people need to know that when they purchase their first home?
Yeah, I think it's important to realize that, just going out and buying a house doesn't mean you're going to make money, right? So if you go into it and think, okay, let me look, if you want to buy a property and you go into it and look at it like an investment, you look at different metrics, you look at, I'll give you a real simple way. If you're interested in buying a house and you want to look at it more like an investment, if you move to a city, we all know there's those areas that are up and coming, right? So, you look back 10 years and say, man, I wish I bought in that area of the city. Okay, I'm going to tell you how to figure out the next up and coming area. First off, focus on areas of the country where a lot of people are moving. I just wrote a blog article talking about geographic arbitrage. So you can check that out at nextlevelincome.com. Click on the blog and you can scroll down a couple there. And what you'll see is that you can see where people are moving. You can actually see where people are moving. United Van Lines comes out every year and says, hey, this is where people are moving. They're moving from California. They're moving to the Carolinas, for instance. So I would ideally live in one of those areas. Look at cities, and I talk about how to find cities that are growing. Once you are in that city, if you're already living somewhere, you can go on the city's or the town's website, and they'll tell you typically the future development plans and where they're going to put money. And if you focus on where those development plans are, you can see where the city's going to put future infrastructure. And what happens is development and private dollars follow the public dollars that are going into those areas. Now, you have to be careful. When we moved to Asheville, we moved to a place called West Asheville, and people actually made fun of me for living in that area. They're like, "Oh, you can't afford to live anywhere nicer, in Asheville." Well, when my wife and I did our due diligence, and remember, we've been buying and investing in properties for 15 years at that point. I did the same research that I'm explaining how you can do yourself, and we knew that area was going to improve because we knew that the city was going to invest. 10 years later, property prices had increased, 50, 60, 70% from when we moved there. And we moved on to the next area in town when I can look out my window here and I can see where the city is pouring those infrastructure dollars in. And what I can tell you is we bought in West Asheville. It increased in value significantly. We then bought in an area called the South Slope that the city built out a master plan. And now we're in an area that's a little bit different, and the city's investing in again. So you, if you're listening today, can do the same thing yourself. And that's how you can look at a home purchase more like an investment, even if you are just buying a single family home, and you can still make more money than if you just went and bought a nice house in a nice area.
That's really cool. So this book, tell us more about the book, why you wrote it, and why we should definitely read it.
Yeah. So first off, I'm going to give it to you for free today if you're listening. So check us out, nextlevelincome.com. There we go. Yeah. And I'll tell you what, nothing's free, they say, right? So here's what you got to do. You go to nextlevelincome.com and you put your email address in, you'll get it for free. So you trade your email address. You'll get our podcast, you'll get our blogs that come out each week. If you don't like it, you can unsubscribe, but you still get the book. So just go to nextlevelincome.com, click on the book link. The reason I wrote it, Brandy, is to tell my story to help you shortcut the process to success in real estate investing. So I talk about my journey over the past, now more than 20 years, starting in single family homes, ultimately ending in commercial real estate, and how I did that. But I walk through not only my own personal story, but also, why I think multifamily is a great area to invest in the future. I also talk about why I got out of single family rentals in the first place. So whether or not you ever invest in multifamily, I think there's a lot of lessons that go through that. The same process I just explained about how to, figure out the best areas in the country to you personally move. It's the same strategy that we employ, for instance, in finding our multifamily deals. So there's a lot of parallels between, how to be successful in residential as well as commercial real estate.
That's awesome. That's really awesome. For the last, I guess, seems like the last several weeks, we've been getting so much real estate information on our podcast, and this has been definitely one of those ones that I definitely going to go back and listen to again, and try to see if I can apply some of the methods that you have. Really depth and knowledge. And I think a lot of people just really don't even get how you just need to just look at real estate in a different viewpoint than normally what you all look at, just based on, oh yeah, that's Dallas, let's just invest in Dallas, instead of when you moved to where you moved at, you literally seen that there was plans to come to develop that particular city. That's awesome.
Absolutely. And no, Brandy, you've had some terrific guests. One of my partners, Christian Allen, on the insurance side, I think was on here recently with Money Insights. They have a great white paper on our website as well. I talk about using, the infinite banking strategy and high cash value life insurance to help fund some of these deals. And actually, I failed to mention that, but I actually rewrote my book and added a chapter called Your Opportunity Fund that talks just about that. So we got a great white paper on the website. Get the book for free, the blog, the podcast, you can subscribe there. And, I think what you guys do for your audience is tremendous, Brandy. If we could provide any more value, please feel free to reach out to us and check us out at nextlevelincome.com.
Oh man, thank you very much, Chris, for joining us today. Appreciate you.
Absolutely, man. My pleasure, Brandy. Thanks so much.
All right. Thanks. Next on IBS.